The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour. As always, we come to you at the appointed time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on today? Well, if you didn't catch my 2 p.m. update, I've got an alternate view of what everybody's trying to push. That is a narrative, and that is something that's generally not a narrative, something pushed that doesn't make a lot of sense and probably isn't backed up by the facts. My belief is that over the last couple of days, we've had the minority leader in the Senate fold like a $5 suitcase on spending. The bill, although no one's seen the total thing, is probably going to add about $2 trillion to the national debt, and too sweet. Most people are assuming that, are trying to have the narrative that the Fed is raising rates too fast. I'm going to say the narrative should be that we're spending way too much money, and we've already been warned to stop it. But that's it. Anyway, higher interest rates temporarily spilling over, or the thought of rates to spilling over, have led into gold, and we've pulled back. As I said yesterday when someone asked on gold what I was thinking, this is kind of going to be it. You're going to have to sit on your hands for a long time. You're probably going to be going up for the next 2 years. But the acceleration in gold in 1980 and really in 2000 was when rates peaked. And we haven't quite gotten there yet. You already got some early movement before that. But I'm going to say that, yes, we're in a seventh wave in gold, or at least that's the way I plan on trading it. And that means that you're going to have to sit on your hands for a long time. Trading in and out will be problematic. You're going to have to decide where to put your stop and kind of just hold your breath a lot. Of course, after some of the stuff came out from yesterday, Charlie Munger came out in an interview and started predicting a much bigger recession. Retail sales fell 0.6%. I think that's just the beginning of that, as many people quit buying other things, as gasoline, diesel has dropped a little bit, and actually quite a bit. But I just went out to lunch to pick up some food. And if anything, every time I go, the prices are higher. So we're probably looking at food having at least 3 more months before it may start coming back to some kind of normal. But that's it. Roblox, RB, I thought this was interesting. RBLX, right? That is it. So let's pull up a chart on this one. RBLX. Okay. So you've gapped down, and I think but you haven't come quite to testing the previous low, but I think you're going to get there. 2165, that's the May 10th low. Why they reported that they had, I forget what it was, 15% more engagement than they had a year ago. The prices a year ago were looking at 100% growth. So, did they bounce and double off the top? Yeah. Now they're probably going to come around here, and they may need a year of consolidation before this stock is worth buying again. It doesn't look horrible. but my guess is that you are going to see 2165 before there's any significant low on it. We talked about a lot of the new reviews coming out. Most of them I can't even repeat on the air, but apparently the $1 billion or close to $1 billion on Avatar has been flushed down the toilet. We've talked about some of the other big spending items that they've spent a lot of money on, just being incredibly bad. And some of the other movies, especially like at Disney also, I think there was a couple things going on. One, a lot of people didn't understand what Midwest people or people not on the coast wanted to watch and their sensibilities. Two, they decided to inject a lot of stuff that people, again, didn't really stand up to the canon from the previous stuff. We've seen Star Wars, and now the fifth different version ending of the Indiana Jones movie was rolled out last night at yet another premiere, trying to find anything that will redeem that, which you're going to spend about $500 million on, and it looks like it's a giant turkey. It just seems like Hollywood, coming out of the pandemic, wanted to make a lot of stuff, and they had kind of an idea of what everybody wanted to see, and very little of it has turned out very good. The only movie that seems to be getting any kind of buzz is called The Onion, and that's like a sequel to the Daniel Craig movie from a couple of years ago. Most everything else getting pretty low marks as maybe something you'd watch at home at TV, but certainly not go to the theaters for. Another one I forget the name of it too, is getting slammed horribly, and it's a Civil War drama with the slapper in chief from what's his name now, the Fresh Prince from last year, but he's not getting kind of a bad rap on it, but apparently the whole movie is. So every time I'm looking for something that maybe will drag people back into the theaters, that'll make people want to subscribe to Netflix or Paramount or Disney, the stuff coming out in the last 3 or 4 months has been absolutely tragically bad. And I think what you see on Netflix, they've had a couple of big successes, but they've also had their share of horrible, huge boondoggles. Generally, the less money that they spent, the better the return on money from all of these companies. And I suspect, I've brought it up a few times, that most of these places are running right into the same problem that they had in the 70s, where they just thought that they could throw all the stars at a particular disaster movie like the Poseidon Adventure or what was it, the other one, Earthquake. There was a high-rise one, and man, that about ran Hollywood totally broke by the time they got to about 1977 or 78. I think the same kind of thing is going on here. We'll be back in a minute.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors. Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And as we come back, we're taking a look out here. As I said earlier, I was looking around 388, and we've been hovering around there for a while. As I end every show, I say, sell when you can, not when you have to. Well, this was cover when you can, not when you have to. I'm not a big fan of going in with positions to quad witching. And I was very adamant about getting short yesterday after the Fed meeting and looking for this 388. That was based on an options position. Once we get into tomorrow, though, you have options on futures that expire at 9:35 in the morning. So you're going to have probably a lot of back and forth, sometimes not a lot of rhyme and reason. I tend to wait until at least 10:30 to start looking at positions. So I would rather just go in without a position, at least on the morning, wait till some of these things settle. So we did get out of our short positions, and I was basically saying 388 and you want out. So we'll see what happens by the end of the day. Options do kind of point to about 30 points higher or 30 points lower on the S&P. So kind of but, you know, I'm going to say 90% of the time, 388 should be the low here, at least for today. There is a 10% outside chance that you have 30 points lower or higher before the end of the day, but I would not be highly surprised to see 388 on the SPYs as the print when we close today. Now tomorrow, of course, quad witching, you got a lot of different stuff. You can move around a lot. Maybe I'll have a position, maybe I won't. But it does get a little more dicey to figure out what's going on, mostly because there's so many other people, and probably many of them on the wrong side tomorrow, that they may, it's not uncommon to see a huge amount of upgrades and downgrades and everything else to try to get people out of some of those positions. But we shall see. Anyway, I'm not looking for a big move yet. Before the close. This is about where we should be. I think a lot of option market makers are probably trying to get out and settle as many positions as they can today, or at least neutralize them, go delta neutral for tomorrow. So they're not going to be too concerned. But I don't think I have an edge now. I had the edge being short, and now the question is, do we get any kind of signals for tomorrow? But like I said, you almost have to wait for tomorrow and see how it starts to develop. But other stocks out there been talking about. Oh, I had a question here about X. So I was looking at that one. Okay. Man, I'd like to buy it at about, if I was going to buy it. Oh, we got a call. Let's go take a look at that real quick. Let's go to Jeff in Philly. Go ahead.
Hi, David. How are you doing?
Fantastic. Go ahead.
Excellent. Thanks. Yeah, I was a little confused by the rollover this week. So this past Monday, a few days ago, should have been the start of the next month in equities and FX futures, and I double checked it on CMEgroup.com. And in the past, by this past Monday, I would see more open interest and more volume, on the new front month. But this week I didn't see it until today. So yesterday, going back to Monday, I kept looking, and I wasn't seeing the volume of the open interest higher, on the March contract. And I don't remember seeing that before. I was wondering if you could have any insights about that.
This is on Forex?
Both Forex futures as well as equity futures. Normally what I see is the previous Friday. So Monday was the official rollover date. The Friday before that Monday, you start to see more volume and more open interest on the new front month, which I did not see this past Friday. And so I expected to see it Monday, didn't see it. Tuesday, didn't see it. And I didn't see it until today. So it's just kind of a weird thing. And, maybe it has to do with being the fourth quarter holiday season or something. I don't know.
Well, I can't speak to Forex because I've never been a Forex trader. And other than watching it and seeing how it affects the equity market or the bond market, is basically the extent that I've done on that. Now, for equities, what generally happens is because the volatility between Monday, the day after options expiration, and into the end of the year tends to be about 50% of what it is the rest of the year, historically. A lot of people don't put things on or take them off. So the open interest is going to probably be fairly low until maybe the last day of the year. And then you're going to start seeing a lot more come on the first 2 weeks of in January. But generally, a lot of people don't want to have a lot of risk. They don't want to pay a lot of premium. And so you've got both sides saying, hey, I'm going to kind of stand back. I'm not going to throw this out, and I'm not going to buy it. So for that point, as I said yesterday on the show, I was looking for the blowout here today and maybe into Friday, and then start looking into Monday as some kind of low where the volumes starts being low, and the stocks that are way too short start ticking up all the way through Christmas. That's kind of the pattern. If you're going to have a dump into the end of the year, it generally starts the day after Christmas or the first trading day after Christmas. So this is a very tough week starting Monday to be short. But as far as that goes, like I said, I don't see a lot happening in options. No one wants to buy them. because the volatility is low. Most people don't want to sell them because people aren't willing to pay up for them. So there tends to be kind of a low volume in options and even in open interest and futures for equities until we get pretty much the last day or two of the year.
Okay,
does that make sense?
Okay, so it's a fourth quarter effect. I understand.
Yeah, well, it's just that holiday effect, light volume effects. Generally, the only plays I like after options expiration in December is highly shorted stocks. And that way, if you get one of those that's on a squeeze, they just will not let those folks out until they run them broke. So, but that generally starts on Monday. Now, we've got options rollover on Monday and Tuesday. And, of course, quad witching tomorrow. So it'll probably be active Monday and Tuesday. I don't know if there's going to be a wide range, though. I think that's more of a last couple of days of the year thing. We'll be back in a minute.
I think so. Bye.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
And as we come back, I was looking at X, and we've got that. Let's see here. Yeah, this looks to me like it wants to come down to 2250. So you got 2 gaps down, really. Probably get a third maybe here in the next week. Support probably comes in right around that 25 to 2250. Don't see anything else much going on in that. Let's take a look at Apple. We've been looking at that to hit 138. That was that gap here that goes back to the 10th of November on the gap up. That was 118 million shares. You blew through it today on 57 million shares. So I wouldn't be too surprised to see possibly, if this market turns around, maybe tomorrow that goes up to 137.50 to 140. We'll have to look at that. It's a possible play for the newsletter tomorrow. I am wheels up at about 2:15 tomorrow, so there will be no show. And, of course, I'm on vacation until the 3rd of January, something like that, the day after that. So I'll be gone for a while. Newsletters will continue, and I'll be close to a internet connection during all that time. I just won't be doing the show. I've got a variety of things going on. As I said, leaving tomorrow on a jet plane. Yeah, I like that song. Anyway, that's just a reminder. Okay, other things going on here. Looked at that. I didn't look at Disney. Okay. Not a lot of volume, but certainly looks like you want to come into this candle here, the November 9th candle. That had 62 million shares. 9 million shares so far today. You kind of just kissed it. Maybe there is something there. Not too bad. We looked at some of the other stocks that had a similar pattern that wasn't too bad. It was DocU. This was the one I liked the best on earnings when we talked about it, mostly because it had a low volume test of the previous low. Quite didn't get there, but certainly the energy off the November 15th low down to that December 6th low, that energy was very light, and you popped on earnings with a lot of gusto. You blew through the previous high. Now that looks like it's going to come around and try to find support around in the mid $54 range. But the same kind of pattern out there. So we'll take a look at that. I think we got some other emails here. Let's go check on those. The junk and the spam and the trash. Okay. Okay. Let's see anything else. 5G coverage. Okay. Let's go ahead and look at some of these other stocks that are moving. Okay. I need to S&P 500. Let's go to look at the ones that have the biggest one. Okay, others out here. We were talking about a possible gap down in the SMHs for a 3-gap play. Western Digital certainly gapped down into its previous low, did so on heavier volume than the $31.56 low. And we didn't quite get there, I guess, today. That had 4.5 million shares, he said, from September 29th. Got that 32.12 today. Didn't quite get there, but on almost 7 million shares already. So that looked good. Energy is about the same on the way up, on the way down. So let's take a look at the SMHs and see whether we got that 3-gap play setting up. Certainly below the 3x3 on the display, on the displaced moving average, which isn't good. So far, you don't have a ton of volume. My thoughts, though, are that at the beginning of the year, you're probably coming around to 198-ish, where that double gap is from the 9th of November. You did gap up on 8.5 million shares on the 10th, kind of coming back into that. But ideally, if the rest of the market's kind of weak, as I think it should be, probably the first support level is that 198. Okay. Question from Sam about Match Group, MTCH. I haven't looked at this one in a long time. Trying to find some kind of low, but the volume's too high. You did gap down here today also, so don't see much in that, except other light volume. And again, a lot of times stocks can find some lows, especially if they've been on the sell side all year long. Generally, it's not trying. You don't want to chase these before the last day of the year, and even then, sometimes you want to give them a couple of days into next year. TCOM rally, okay. Let's see on some other ones. Looked at the SMHs. Let's take a look at the SOX on the opposite side of that. You're just kind of bouncing around on the lows. Okay. Other stocks out there. Okay. One that had been the perennial winner in home sales because people were adding so many of them, and of course many other disasters. Speaking of disaster movies of the 70s, this actually, I kind of like it. I just, again, wouldn't buy it before the end of the year. But this thing has been going really slowly sideways and slowly lower. At some point, this thing's probably going to be a good buy, especially maybe into the next hurricane season. You certainly came out of those. It may take another 3 months for this thing to consolidate out, but this doesn't look really that bad when you consider that it came down on huge volume on October 19th. Now, is it ever going back up to those highs? Probably not any time in the real near future. But I'm going to keep an eye on this because you could just go up, fill that gap, and that would still be a 35% winner. So that'll it. Give on Micron. Take a quick look at that. Okay. Oh, guess I actually ought to type it in correctly with MU. And see. Just like a lot of these other stocks that have been on sale, it's still probably the premier stock out there unless you're buying Taiwan Semiconductor. We'll look at that one next. You're down today on lighter volume. Ideally, if you think we're going to rally next year, what you would love to see is these things just sell off into the end of the year on light volume. Today isn't a big volume day. You need it probably back at around $50 with less than 24 million shares. Ideally, you get down there with like 10 million shares or something at the end of the year. That may be a nice setup, but I wouldn't be jumping on it right now. Okay. Let's see. Oh, going to the break again. 877-927-6648. Email me at path@tfnn.com. Put a message in the den.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Pete and his brother Repeat ask, where would you cover a house short from 3670? Well, I probably would just cover it now. I don't like the setup here. This probably suggests that you've got at least a couple of days before you're probably going to run into the uptrend and see whether or not you're going to break lower. You got light volume here today, so I would just be out of it. I don't like the setup at all, so it wouldn't be it. I'm not thinking higher, but it's just you got to bounce on light volume at the lows. Unfortunately, it came down on higher. More energy from that 39.79. I like where the energy and the lows tell the same story. Generally, when you get a light volume low, all you do is bounce and then come back down, and I can see a trade for that. I just don't see a lot. Maybe you get something going on tomorrow, but I'm thinking you get Monday and Tuesday for rollover for options, and then you're going to just see volume really decay all the way into Christmas, and we're going to see a short squeeze kind of like we saw on Tuesday and Wednesday. Probably not to that degree, but I do think that stocks that are way too short may see some move higher. One of them is starting to accumulate a huge amount of short interest is Tesla. It looks like, that 148 might be fairly good support for that. But people have been piling on and piling on. We've seen how this, I'm not saying it's anything more than a bounce in a downtrend, but I would watch that next week if you're thinking short on this, because it is starting to pile up a lot of short positions in it. That's generally the week before Christmas. Not a good time to be in stocks that are heavily shorted. It doesn't, you probably have 0.5% on the upside unless something really else bad happens. 877-927-6648. CF. Let's take a look at that real quick. Okay. You had too much volume yesterday. Got a little bounce in it today. Looks to me like it wants to go test $90.25. That's the September 29th low. You had just a smidge more energy on the downside, so I think that there are probably better stocks out there. I don't know what he says when he's holding it. Maybe he's holding it for a bounce. I would suggest that probably you're going to see either Monday or Tuesday this thing back down in that $91 range. And maybe you find some kind of low to bounce off of. But there are a lot of stocks out there gaining a lot of short interest over the last couple of days. I think maybe you get a couple more of those. Mostly that's on the TD9 count. There were a bunch of stocks that were rolling through today. Maybe some more tomorrow that kind of turn around, maybe midday, maybe Monday. But I think we're probably within 2 trading days of finding some kind of low. I'm not expecting a huge bounce on the indexes, but I do think a lot of these stocks that are heavily shorted. I didn't look at this one. Let's take a quick look, see what the short interest looks like on CF. Okay. I got to move this so I can get over it. Okay. Pretty light shorts. We'll see what the bi-monthly looks like. And 1-2 days to cover. So, again, I think that there's a lot of stocks that are heavily shorted. You can see a lot of those short positions. They'll want to get out of them, or most people want to get out of their short positions if they're short only for the ride lower before Christmas. And just kind of timing those for the bounce is probably where the bulk of the money is going to be made between now and Christmas. Okay. Let's see what else out here we have. Okay, let's get back to that. We'll look at some of these other stocks. Okay. Okay, on the winning side, as I said, some stocks are just too short. Lennar, I think they had earnings this morning, didn't they? Or was it the other one? I can't remember now. Again, pretty heavily shorted over the last week. You did kind of close right at support and come back up. I don't think it's got a it's kind of come back up here to where you'd probably want to short it. But again, I don't see a lot of reasons today to be going short these stocks. They could just slowly squeeze you out before the beginning of the year. My guess is if you did want to short this in the housing sector, it's probably around the first or second, the second of the first trading day of the year, maybe the last trading day of the year, something like that. You want to see. I don't see a lot of reasons on jumping on a grenade for that right now. To CRL. Okay. The other big winner of the day, Charles River Laboratories. Take a look at that. I got an email here. Okay. Would bonds have short covering as well, in your opinion? You know, the bond folks, they tend to go really dormant. And you're already seeing that going sideways till the end of the year. I'd have to go back and look at it. Again, I'm not a huge bond trader. I tend to watch this and Forex only for the effect it has on equities. But it's already started going sideways. My guess is they're going to drag this out probably through the end of the year. You'll probably at the beginning of the year start seeing new positions. But a lot of these folks have already left and checked out for the year. Volume gets fairly narrow very late in the year here, so I don't see a lot of reasons to start going after that. Okay, what else? Take a look at UNG. We'll do that. We've seen some weather. We've busted off the lows. You're kind of going sideways. My guess is that you really need that one more push to get this thing going and higher through March. But that's it. Don't see a lot going on here at the moment. You really need, this is all going to be, I think, this year all about weather. I don't think it's going to be a lot about other things. So This is certainly one where you just want to be watching the Weather Channel all the time and looking for very cold weather headed your way, and probably start seeing this move a couple of days before it freezes us all. But it's just an opinion. We'll be back in a minute. Just as a reminder, this is my last show of the year. I'll be back the day after we start trading again next year. But I'll be wheels up at about 2 o'clock tomorrow. So don't look for me. I won't be here.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we wrap the show up with Ben. And I like that movie too. What are your thoughts on market direction with $3 trillion in options expiring Friday? I think a great deal of it got handled today. I think a lot of people in this market decided that are option market makers. I think when we look at the numbers tonight, I won't get them for about an hour or two, are going to have locked up or hedged or moved in and out of enough positions that tomorrow probably won't be as big a day as you would think. Generally, not always, but I'm going to say 80% of the time, if you have a big day on Thursday, even in quad witching, a lot of times that takes care of the interday stuff on Friday. As I said, we were looking kind of for the low at 388 on the SPYs, and that was what options was telling us. We kind of got there. That acted as support. Some of the other big stocks, like I said, could you see a little bit of bounce in Apple, maybe Microsoft tomorrow, 1% or 2%, and that would all, be able to maybe take the selling for the rest of the smaller stocks. You got Microsoft off 3% today, 4.5% on Apple. That actually kind of broke support. So that is kind of the one thing out there that makes me think that the indexes could have bigger problems tomorrow. Whether or not anybody wants to go into the weekend, I think that the spending bill Saturday night in the dead of night, getting passed, probably going to want to read that on Sunday and see what futures are like Sunday night. That may be a bigger move. Options roll over Monday and Tuesday. Then I think you go into a light volume scenario where you go slightly higher into Christmas. And probably the only stocks that move well are the ones that are way too short. I won't be here tomorrow, not back till January if you're just tuning in. So have a good Christmas. Newsletters will proceed and continue ad nauseum. Sell when you can, not when you have to. We'll see you next year.
Building wealth trading in the stock market seems impossible.